Good afternoon. It's Jeff Christian of CPM Group. It's about 1:10 on Friday, the 15th of December here in New York. I want to talk a little bit about what we've seen in gold and silver prices over the last couple weeks, and then talk a little bit about what we have seen over the course of the last year and what we expect for next year. A little bit of housekeeping will explain the subject matter. Our video schedule at CPM Group is we will do this video today, Friday, the 15th. We'll do another one next Tuesday, and then we're going to take 2 weeks off for year-end holidays. We'll be back probably on the 5th of January. That's our scheduled resumption for the next video after next Tuesday. And we'll be doing some more wrap-up of the year that's been and our expectations for the year that comes. So just, a little bit of housekeeping. Now, we've seen prices very volatile in the first half of this month. We saw gold rise to record levels on Sunday night, come back off sharply, come back up. It's about $2,050 right now as I'm speaking. Silver rose, not to a record level, but it rose sharply, and on December 3rd as well. Came back off, came back up, and it continues to trade in that range of, say, 22 to 26 something an ounce. A lot of volatility, been reacting to a number of factors. A very strong jobs report at the end of November, lower inflation figures than the FOMC and Fed announcements yesterday, the 14th of December. So a lot of things going on. And we've seen volatility there. Over the course of the year, things have been relatively calm. We used as our theme for Monex, a good client of ours for decades. For 2023, we said that it would be the year of the eye of the storm, that we would be in a relatively calm place, having gone through some very volatile years, 2019 through 2022. But that those big problems that the world was facing haven't gone away. Some new ones have come, things have gotten bigger, some things have gotten better, but that we were looking at 24 and 25 as a year where we get out of the eye of the storm and back into the next storm. And we really think that that's going to happen. It was a calm year, especially for silver. Gold did rise to new record prices a couple times over the course of the year. But even within that, it was a relatively calm, steady way. In terms of the promoters, the world didn't collapse. The banking system didn't collapse. The dollar didn't collapse. The dollar actually moved higher. We had a couple small or medium-sized banks that had troubles in the first half of this year. The banking regulators took proactive actions and kept that from spreading. So it was a relatively modest factor. We did lose one large bank in Europe, but it was taken over and no creditors, no depositors lost money on it. So it was a relatively quiet period of time. Our expectations are that 2024 will not be so calm. And we see the December price volatility, not just in gold and silver, but in other commodities. And the dollar has been coming off somewhat from its high levels earlier this year. Interest rates, stocks, a lot of volatility across the board there in the first half of December. And we see that as a prelude for what 2024 has in store. We're going into 2024 in a better economic position than we had expected and that most people had expected. And I'll go through some charts in a second about that. Unfortunately, politically, we are probably in worse shape going into 2024 than most of us had expected. We have expected politics to be problematic in 2024, 2025. And they show every sign of being problematic, perhaps even more problematic than we had anticipated. So let's look at some of the economic backgrounds. This is real GDP quarter basis. And you can see that real GDP, 5% in the third quarter. It's coming off a little bit this year, but it's basically in line with much of what we've seen, definitely since 2010, 2009, when we came out of the last recession with the exception of the 2020. And it's been relatively strong. Did have a quarter or two of negative growth in 2022, but it's been basically pretty strong. Our expectation, actually, the Fed came out with its expectation of 1.4% real GDP next year. That has been CPM Group's expectation for our 2024 U.S. GDP, real GDP, at least for several months now. And we do see a slowing down of real economic activity. Even so, we're seeing very strong numbers there. So the Fed has raised interest rates substantially since 2022. They have shown signs of peaking. They are talking in yesterday's commentary about the potential for 3 interest rate cuts over the course of 2024. Probably not in the first quarter, although maybe as soon as March you might see one. So we seem to be at or near the end of the interest rate increase cycle, and we're going through a plateauing period now for several months, probably a couple more months, 2-3 more months at least going forward, and then we might see some declines. So interest rates, as I've said repeatedly, they've risen from 0%, 25 basis points to 5.25%, 5.5% interest. And even with that big number increase, you still have nominal interest rates at very low levels, basically lower than most of the period of time from the 1960s into, say, 2000. So it hasn't been an increase that has thrown the world or the United States into a recession. If you look at it on a real basis, and these are all 10-year Treasury notes, on a real basis, real interest rates have gone positive on a 10-year note, and they are now around 2%. Our expectation is that there are very few investors who are going to say, oh, if I can lock in 2% real returns on Treasury notes over the next 10 years, there's no reason for me to hold gold and silver at this point. We don't think that 2% real rates are enough to cause investors to pivot away from gold and silver, especially in an environment with other economic problems, financial market problems, and political uncertainties, which are likely to rise. The Fed, in assessing its monetary policy, looks at its chart, which is to try to maximize employment while keeping inflation under control. This is like U.S. unemployment. You can see it's at the lowest levels it's been since the 1960s or so. And so you've got a relatively strong economy there. Employment is coming back. Jobs and employment participation is rising again after a steep decline in 2020. And the other factor is inflation. And, inflation, we have had a transitory spike up to 8%, and we are now back down to 3 or 4%, depending on how you look at U.S. consumer price inflation. So the Fed has been doing relatively decently. The economy's been doing relatively decent recently. That gives the Fed leeway to be more proactive in facing the challenges that we see in 2024. But as I've also often said, monetary policy and Fed policy and central bank policy around the world is secondary to fiscal policy. And it's the fiscal realm and the governance realm, the president and the Congress in the United States, the presidents and prime ministers and their Congresses around the world. That's what really worries us going into 24. So we're looking for a more volatile 2024. We think the volatility that you've seen in the first half of December possibly is a prelude or an indication of what's yet to come. We may see things calm down over the next couple of weeks as financial markets around the world sort of wrap up the year. You could see some profit taking and some book squaring that could move the prices up or down. Yeah, with gold, we wouldn't be surprised to see the price come back down to $2,020 or so on that kind of profit taking after moving up sharply earlier this week and yesterday. And with silver, we wouldn't be surprised to see it come off a little bit too. We're not looking for any major declines over the next couple of weeks, but we're also not necessarily looking for further increases over the next couple of weeks. Once January starts, it's a different book, and we wouldn't be surprised to see a strengthening of gold and silver prices in January and February for a variety of reasons. That's all I have for now. Take care of yourself. Take care of people around you. Do something good for the world this weekend, and we'll talk to you on Tuesday.